Welcome to The Real Money Show, the number 18778 Silver, and the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined remotely by Jerry Correia. Jerry, how you doing?
I'm here. I'm good. How do I sound?
Good. You sound like you're in a room with a megaphone. It's interesting. We'll give this a go.
Let's go.
Interesting week. I felt like it was a very busy week. Lots of people buying, trying to get the dip. Silver started to move up in the last couple of days, and I think people are trying to get on board with the movement upwards as well. So kind of knocking around on the silver market, gold holding really steady. I know in the futures market we got into the 2,500 range, new all-time highs, something that every follower of the gold market has to get used to. You're going to keep hearing that over and over again, all-time highs, because this is far from over. What was give us a sense of what your week was like and what you've been seeing?
The week was certainly, I echo that sentiment. The week was very busy. All eyes were focused on inflation data. Last week when we ended the week off, I really wanted to chime in and hone in on silver being so undervalued. I highlighted, which we try to do at nauseum, the silver to gold ratio at last week's show. We're at a nosebleed section of 89.5 to 1. And I just sounded the alarms. I'm like, guys, if this is something that you want to get involved in, this is where you want to get going in. And today, ending the week off while we were recording on the Thursday, silver's up 3% on this week. Gold is up 1.5%. The silver to gold ratio, which was at 89 to 1, is currently sitting at 86.5, and it looks to be breaking down even further. We have to eye the 82 level, of course. But if you're still on the fence and you're not too certain, this is still an area anywhere north of 85 to 1. This is a screaming buy for silver. So, yeah, I echo that. Congrats to those who got involved. You picked the dip, but I also agree that we're going to be breaking higher highs is what we're hearing. And Crescat Capital, once again, was on Bloomberg this week. We're going to talk about that a little bit later on the show. But they're echoing that viewpoint on gold. Central bank buying, we're going to be breaking through all-time highs more and more often.
Yeah, I think that just understanding the basic fundamentals, and we're in a situation where we get to see it all unfolding in real time. I was listening to an interview on Arcadia Economics about the unit, and forgive me, I can't remember the name of the person that they were interviewing, but he was talking about the unit on Arcadia Economics and just reiterating that, the U.S. weaponized the dollar against Russia. You have the BRICS nations who are now dumping treasuries. They're buying physical gold. They want to have a gold currency effectively backed by 40% gold. And this is something they're working towards. There's nothing coming out that's going against that concept. And when they meet in October, I'm sure we're going to not hear the word unit out directly, but certainly things about such a system are going to be talked about a lot as well. I mean, by October, things are going to be pretty scary, right, Jerry? I mean, we're already seeing a potential breakout of another pandemic right in time for the election. And so things are getting pretty dicey from the geopolitical perspective. So you've got central banks buying physical gold. Where do you see silver playing out in this? I mean, I look at silver, I see it kind of feels like it's being pulled along by gold with a lot of slack. Sometimes that slack tightens, like what you're seeing today, where the ratio has shrunk pretty good, 3%, 3 points. But when do we see that breakout? Do you see that happening now, or is it something that we just don't know when, but we know it's going to happen?
Yeah, I think we should bring in the Crescat focus. So Crescat Capital, Tavi Costa specifically at Crescat. Analysis in the news this week. They're on Bloomberg. Great job, Tavi. You're discussing central banks, macroeconomic and geopolitical situations. And he really highlighted the importing of metals around the world, central banks just continuing, despite record high in pricing. The the growing uncertainty and volatility on the geopolitical and macroeconomic fronts has just continued to accelerate. And this trend of de-dollarizing to preserve the country's purchasing power of their reserves is trumping the price. So the demand is continuing. And while they're accumulating gold, China reported last week that they reported record levels of silver imports. That's right. Silver is being imported at a crazy level in China. And this is a 4-month chain. This chart is just off the charts. The record of Chinese getting into the silver market. So it's supported. Because we know when gold performs, silver usually waits for gold to confirm certain technical levels. Like we're all watching the $2,500 mark in gold. But I believe once gold breaks the 2,500 mark, silver will be off of the races. That silver to gold ratio will tighten relatively quickly. But yeah, it's just near record level purchases by central banks. And it is their time to convert fiat currencies and anything dollar-denominated assets into physical monetary metals. And we argue to do the same at Guildhall. Become your own central bank with Guildhall Wealth. We want to get involved. Give us a call, 1-8778-SILVER, the website, guildhallwealth.com, or get some silver tubes in your hands. The Mad Max scenario is not out of the woods. We're not out of the woods. There are plenty black swan potentials, and you want to have some silver in your hands because remember, if you do not hold it, you don't own it, Jeremy.
Thank you, Jerry. That was a great plug for Guildhall Wealth. Speaking of not being out of the woods, Gold Telegraph put this out on their X feed that global debt hit a new high of $315 trillion. And when you think about that, and the higher interest rates that are being paid out on this debt, and what you would need from an economy to grow its way out of that, what has me thinking is, in 1971, Nixon lifted the gold standard. They could have revalued gold right then and there and said, look, we've been printing money. We can't give you gold at $35. There's not enough gold at $35. But if we raise it to $350, there's enough gold to pay you back. So when I see that the debt in the global debt's at $315 trillion, that screams to me a revaluation on gold. What do you think?
Mm-hmm. This is the debt situation. This is the reality of the paper money cracking at the seams. The paper market, the paper money markets are simply losing buying power across the board. Every major currency is losing purchasing power, and their only mechanism is to ramp up that printing press. And as they do, we're continuing to climb. I think the statistic was that the U.S. Printed approximately maybe $50 billion in a month. And this is just going to accelerate. Is this negative reality sustainable? No, it is not. What is the solution? Is it going to be man's tempering their greed and they're just going to slow it down and saying, we're just going to slow down? No, they're not. The printing will continue. The only solution is a gold-backed solution. The only solution that has had a positive result in the past under a sound monetary policy of a gold-backed system, that is the only solution. So it's a matter of time. I think when these headlines, rear its ugly head, it's just going to make people scratch their heads some more and really open their eyes to the true potential of revaluation of gold. And there's no surprise why we have major central banks doing it. Having a gold revaluation account with the Bank of Holland, they have it ready to go. And countries as small as Zimbabwe, once the laughing stock of the currencies globally, backing up their currencies with gold and getting it adopted and used in the society without any negative recourse. I mean, that was once done, and we saw what happened to Muammar Gaddafi and Saddam Hussein tried to go gold back. There is no resistance now. You can do this, and it's being normalized. And for us, it's an exciting time.
I think it's good to remember that, yeah, there was a time where certain political leaders wanted to move to a gold backing and it didn't work out too well for them. Now, all of a sudden, with the BRICS, they're emboldened to do it, and they seem to have nothing in their way to stop them from accumulating gold and potentially moving towards some sort of gold-backed currency. And ultimately, the reason why, by the way, that they're doing that is because gold is not about price. It's about a measurement, and gold is a steady measurement. We think about gold in terms of how much gold to buy things. One thing, as an example, would be how many ounces of gold to buy the Dow Gold Industrial Average, which is something that I want to get into in the next segment, because we bring it up all the time with our clients, Jerry, but Patrick Kareem on X put out a post about that exact subject. So I want to talk about that. And also, it's not just the defensive side of the metals and why they're moving up because of the money printing and the currency supply and the debts, but also specifically silver, as we often talk on this show, is the industrial side. And there's some new industries and new uses for silver. We talked about them last week, but there's another one this week that's going to blow your mind. So stick with us. The number 18778-SILVER, the website guildhallwealth.com. Consider utilizing Guildhall to acquire physical gold and silver. You can do so in a registered account like your RSP, TFSA, Lira, LIF, RIF, RESP, and even the first-time home buyer's account. The number 18778-SILVER and the website guildhallwealth.com. Thank you for joining us on the show. We always love having everyone listening in, and it's great to talk to our clients throughout the week, and they say, hey, I was listening to the show. So it's great that you're keeping up with us, because there's always so much information coming out. We're trying to track it. But one of the things, Jerry, is First Majestic put out a post, and it is about a new usage for silver. Last week, we were talking about fuel cells and how fuel cell technology could drive the automotive market, charges much quicker, has more power, more sustainability. It's massive, and this was something that Toyota was creating. Well, here's another one. Samsung's new silver solid-state batteries are poised to revolutionize EVs with an impressive 600-mile range, 9-minute full charge, and 20-year lifespan. Current EVs require, now this is the key, for anyone interested in the industrial side of silver and whether or not you should own silver, forget about the solar market for a second. Forget about the military market for a second. Forget about the fact that you might even own a Samsung TV or a phone that needs silver in it, or any other digital and electronic device. The current EVs require 5 grams of silver. But this revolutionary technology, that's right, if you want to drive 600 miles on a charge that only took 9 minutes, you're going to need a full kilogram of silver in that battery. Pretty crazy, don't you think, Jerry?
5 grams of silver, that's about $4.50 worth of silver in that EV.
Yeah, but a kilogram is over $1,000 worth. Now, it's going to last you 20 years.
That's right. From $4.50 worth of silver to 1 kilo, and a kilo today is about $1,000. So huge uptick in silver demand.
And then imagine if you're going to produce, a couple million of those, and the price of silver were to triple from here or quadruple from here, you're looking at $4,000 for parts in this battery. So maybe when I say it out loud, it kind of sounds like it's not conceivable, but yet if you want this technology, this is what it's going to take. And maybe they, over the next few years, they improve it and they say, okay, we can do it with 15 ounces instead of 32 ounces, but you're going to sell twice as many units.
Right.
So this is just another tack, another rung on the industrial demand of this market that just says, look, yes, it's a monetary thing. Yes, if gold gets too expensive, silver's going to be there for you. When the middle class decide that they want to get into the silver market, it's look at these fundamentals from the industrial side. Now, right now, the middle class, Jerry, they're still in the stock market, but they're kind of looking at alternatives to the stock market, aren't they? And it's not gold and silver.
Interesting new study. And I love that segue, Jeremy. Interesting new study that just piqued my attention this week. And it was a new study that revealed a shift from stocks. A new study suggests that the rise of sports betting in the U.S. is leading some Americans, particularly those in financially strained households, to withdraw money from their stock investments to fund online gambling. Now, wow, the need for gains, Jeremy, and the uncertainty in the markets potentially to lead to more malinvestment. Stocks, once the go-to, now being swapped out for sports gambling. For every dollar spent now on sports betting, the research claims that a $2 decrease in stock investments. This trend raises concern about potential negative impact on household financial stability, especially among vulnerable populations. However, the gaming industry disputes these findings, arguing, of course, that sports betting is an entertainment expense rather than an investment alternative. The debate highlights the complex relationship, of course, between different forms of risk-taking, right, and activities and their impact on personal finances. So are we really willing to roll the dice and take it from our stock portfolios and roll the dice on how good of a sports bettor you are, how good of a guru in sports you really are? I mean, I love Jays, I love the Leafs, but am I willing to take from my portfolio? Maybe. It depends on how uncertain I am in the stock market. What are your thoughts on that, Jeremy?
Well, I'm going to say right out the gate on this piece of news that, for the record, sports betting does not pay you a dividend, and sports betting doesn't give you interest. Now, I can't say it's a barbarous relic, but you know the drill. All of our gold and silver buyers know the drill, that they're in that respect of what I'm saying.
Right.
No, look, I think that what we're here doing is trying to educate the public on the reasons to own physical gold and physical silver, the fundamentals out there, what the smart money is doing. Looking at a statistic like this is demonstrating that people are desperate and looking for alternatives. Yeah. And when you look at the fundamentals for gold and silver, that's the supply demand side, the geopolitical side, the fact that it hedges against inflation, that you start to realize you don't necessarily have to be taking risks. I think as you learn about physical gold and silver, you realize it's a lot less of a risk than you initially think. And this is part of the reason why we always recommend that people crawl, walk, run with this market. Take a first step, see what it's like, understand the cost of doing business, because when you're new to the market, the costs of doing business are going to be forefront in your mind. It's going to be all about cost. What is this thing costing me? How does this, where are these prices? How does this work, et cetera, et cetera. But once you're in the market, and this is my experience watching clients day in, day out, month over month, year over year, is you get this peace of mind. There's a peace of mind that comes from watching the market do what it's going to naturally do against the debts, against, as we mentioned off the top of the show, the weaponization of the dollar. Countries want to dump treasuries. They want to own physical gold because it insulates you. There's no counterparty risk. If you had cash under the bed and gold under the bed, the government and central banks can still manipulate that cash.
Yeah.
Now, they can try to manipulate the price of gold, but there's a finite amount of it. And so it limits their ability to do that as well, which is why you've seen gold has moved from $250 an ounce in 1999, 2000, to where we are today, almost $2,500.
Yeah.
Right? Now, would you put your neck out on the line, Jerry, like, what's his name? Who's the Austrian economist? Ron Paul. Would you put your neck out on the line and say what Ron Paul said, that by the end of this bull market, you're going to tack another zero onto that gold price?
Yeah. Yep, absolutely. Talking about, going back really quickly to the bettors, I think what they're seeing right now is they're witnessing now a rapid devaluation of their currency. As Voltaire said it best, paper money eventually returns to its intrinsic value of zero, leading to a panic, leading to another area to chase yield. And the yields is something to keep an eye on. This trend that was highlighted this week indicates that, we're going to tack on a couple zeros on gold, because the 2-year yields, this is from Tavi again, have likely peaked for this cycle. And the recent downward trend in the 2-year yield is probably going to accelerate to the downside as the Fed panics to reverse its policy stance. It's important to keep in mind, he says, that historically, falling short-term yields tend to be very positive for gold and silver, which appears to be entering another phase of rising prices in metals after recent consolidation. He says, you do not want to get in the way of this train. The gold and the silver train is ready to take off. The correlations and the trends, because they continually, the data, the statistics are being manipulated. We cannot really trust the data any longer, but we can trust these trends that go back decades. Very strong charts like the 2-year trend, the 2-year yield trend. Watch that, because the gold and silver are going to head into places, areas, and numbers that we have not seen. He covers the current commodity supercycle. I want to, encourage everyone to follow Crescat and Octavio Costa. They're doing an amazing job of highlighting, sound money and sound monetary policy. So, this is what we're going to see. I definitely echo the sentiment once again of Dr. Ron Paul, that there's only one way up, only one way, and that is up for precious metals.
The number 18778 silver, the website guildhallwealth.com. You can acquire physical gold and silver through our website at guildhallpreciousmetals.com. You can call us directly at 18778 silver, or you can go on to our regular website guildhallwealth.com and learn how to hold physical gold in your registered account, where it's fully allocated, segregated, stored outside the banking system. There's no counterparty risk. This is not an investment. This is ownership. And one of the things about physical gold and silver, when we're talking about price going to potentially $25,000, and I know that sounds like la talk, when you consider the debts globally at over $300 trillion, and you realize that prices are just rising and rising and rising, gold is not necessarily, it's not about the price, it's about what it buys you. How many ounces of gold should it take to buy a house, for instance? How many ounces of silver should it take to buy a house? We did a show on that. I think it was one of our most popular shows that we posted on YouTube, because we just did some of the calculations and looked at those averages. Well, one of those ratios is also the Dow Gold ratio. And Patrick Kareem put this out on X. He said the Dow Gold Industrial Average priced in gold. Only the 4th time this has happened in over 100 years, only the 3rd time since gold was unpegged in 1971, that U.S. stocks are very closely to properly imploding priced in gold. What does that mean? It means that right now the ratio is close to 17 to 1, and at the end of bull markets, it can come down to 1 to 1. And there are some that believe it could go past 1 to 1. Right now, you need 16 or 17 ounces of gold to equal $39,000 or 39,000 points, which is where the Dow is. So you need 17 ounces to buy the Dow. At its peak in 1980, the Dow traded at $850 and 850 points, and gold traded at $850. Now, you're not going to bet the farm on that. You're not going to invest everything you have on that sort of ratio, but it is an indicator that demonstrates value. It demonstrates that the Dow is overpriced against gold, or gold is way undervalued against the Dow Jones Industrial. So we believe that you're going to see that come down. Now, in 2011, That ratio hit 4 to 1. We're trading at 16 or 17 to 1 right now. Imagine what that means for the gold price when it comes back down to even 4 to 1. Even if the Dow were to come off by 20, 30%, which, hey, we don't want to see those things happen, but we have to be realistic and say, look, it definitely looks and feels overvalued at this point. You do your research. You speak to the ones you trust. As for us gold and silver holders, we're very confident with where the ratios are right now. We know that there's a lot of room to run, and we're happy to talk to you about that. Just give us a call, 1-877-8-SILVER, the website, guildhallwealth.com. It's funny, when I'm talking to new clients, I love to go to the website, goldprice.org. It's great charts. Love to show clients, Jerry, the gold price in Canadian dollars over the last 15 years and the silver performance over the last 15, 20 years. And you see that gold's up over 500%, silver's up close to 400% at this point. And it really does have a proven track record and very little volatility on the gold side, more so on the silver side, but depending on where you stand on that, perhaps that's opportunity for you. What I've noticed over the years is that there's trends. And one trend is that there's a demand for physical. People don't want the paper as much, that they want to know that if they're going to buy physical gold and silver, that they actually own it. Another trend is more and more we're seeing banks pushing physical gold, or at least talking about gains to be had in that market. Tell us about the latest one, Jerry, and what do you make of this new trend of banks deciding, we'll recommend it?
So many trends to keep an eye on. You mentioned demand in physical, even the growing trend of distrust in the reporting of data reporting, the data being revised lower. As Kobasi reported this week, U.S. jobs numbers have been revised lower by 778,000 jobs since February of 2022, according to BlackRock. Everything's being revised. You can't really trust this trend of distrusting the data, but we do follow the trends of, call it smart money if you'd like. 2 weeks ago, Goldman Sachs analysis reported that they favor gold investing, and now they're pricing in a 41% chance of a U.S. recession. This is up from just 29% back in the early spring. So they're pricing in recessions. And when we follow these trends, such as the Dow to gold ratio in the last segment, there is true in times of this uncertainty and not knowing where to look, there is immense peace of mind in following these cyclical trends and ratios. The Dow to gold ratio, we're going back over 100 years. We're not talking about a 5-minute chart, an hourly or a 5-hour chart. No, we're going back 100 years. The peace of mind that you find in this trend, the silver to gold ratio, the silver to real estate ratio, all are pointing. This is a countdown that has been enacted. We are witnessing a breakthrough in precious metals, and you name it. This is what's happening. More and more people, the forecasts are just being targeting higher and higher again. And I think this is being fueled with central banks losing control. We have an era where we're seeing a mishmash of central banks. Some of them are cutting rates. We have the Bank of Japan that nearly caused market turmoil, or did, and somehow got out of it. By raising interest rates to positive territory, surprisingly, to save the yen. Meanwhile, the U.S. Federal Reserve is now being late to the party. There is a flip-flopping, and it's just a matter of time. Bloomberg strategist Mike McGlone says, just a matter of time before gold goes to $3,000, citing various economic factors. He's arguing that gold's recent outperformance of major stock indices signals deeper macroeconomic issues. He attributes gold's strength to geopolitical shifts, central bank buying, and increasing market volatility, these trends. He sees gold as a safe haven asset amid potential recession risks. This is what's being reported, Jeremy. This is the trend that we have to follow. not the revisions of the Bureau of Labor Statistics that just continually lie. That's the bottom line. And they are lying, and we see right through them. The people will not be gaslit any longer, and they're taking the wheel of their wealth for themselves, either putting it in the sports betting market, or they're doing what the central banks are doing, and they're acquiring gold and silver for themselves.
Yeah, I think that, these banks that are recommending gold seemingly for the first time, normally it's always been a sort of a morality tale. Oh, invest in gold at your own risk. You might, don't leave your house. Bad things can happen to you if you own gold. That's how it's always been framed. Now all of a sudden they seem to be joining the party. I look at that as a bit of a retreat. I think it's a bit of, okay, we know that we're going to have a sort of a limited hangout, if you will, a partial, okay, we admit it's good to have some gold in your portfolio, but by all means, don't go and own it outright. Use our investment vehicles, please. Use these investment vehicles. It's the best way to go. So I do see that trend happening, that there's this retreat is how I see it.
Reversal, that's right.
Yeah, and, I think that either way, it's been good to see people getting involved in the market, and it's been great to see so far this year gold and silver have performed quite well, even through this kind of dip in the market in the summertime when it can be quiet during July, and we've seen a little bit of a pullback in silver. Gold's been very steady. At the end of the day, none of the moves in silver have really shocked anybody, and we're still up something like 20% on the year. So imagine what it looks like going forward into a world of a lot more volatility, whether it's from the investment world or geopolitical risks and things of this nature. I just feel like the market is so strong at this point, and it is getting more and more difficult for, you mentioned, Jerry, manipulating numbers that you can revise later on is something that we've followed for years and years. Oh, they'll say this is the number. They'll revise it 3 months later when no one's paying attention.
Hogwash.
Hogwash. But I think that it's getting harder and harder to manipulate the price in the market. It's becoming so technically strong for gold and silver. And, that teacup, the cup and handle is looking better and better and better, and especially on silver, it's starting to look like, on gold, it's starting to look like a breakout of that. So I think there's really good things to come. And if you've never really looked into this market, it's probably time to consider maybe moving a portion of your portfolio to get a sense of what this market could be about. If major banks are even talking about holding some, it may be worth considering it for the first time. And maybe even if it was something that you didn't have on your radar or were poo-pooing for a while because, it doesn't pay a dividend, etc. But, if you have a stock that's down 30%, paying a dividend isn't exactly helping you. And the question is if you're in your 60s or whatnot, do you have 20 years to wait for the stocks to come back if they were to fall from here? This last jittering of the stock market, the insiders made the most money. Right? I think NVIDIA was up something like over 20% from the bottom. How many people who were panicking to get out bought back in? The insiders are making the money. And what's nice about gold and silver is we don't really have to worry about that because you just buy it, you hold it, you wait for life to happen, and gold just seems to continue to march forward. Silver's a little bit behind, but as this market takes off, it's going to play catch up in a big way. So I think that that's very, very exciting. Give us a call, the number 1-877-8-SILVER, the website guildhallwealth.com. Remember, if you can't hold it, you don't own it. At the top of the show, we were talking about the global debt being over 300 trillion. It's ridiculous. And you sit back, you say, there was a time where they'd say the debts didn't matter, but now they really do matter because we're dealing with inflation. We're dealing with higher taxation. The government seems to want to come after you every which way from Sunday. Now I can't help but say all of a sudden, there looks like there could be a new pandemic on the horizon just in time for elections. And, you think back to what happened during the last one. They shut everyone down. The economy shut down. Let's print a bunch of money. Let's put money in people's pockets. Well, where did that money come from? There's no free lunch in this world. And now we're all paying for it. So do you continue to trust the government blindly and say, oh, they've got our best interest at heart? I don't know if that's so much the case with the majority anymore. These are definitely challenging times. I'm personally a positive guy. I think that there's good times ahead. I think that there's very good times ahead, but we've got to move through this, and it is a challenge. But there are things that you can do, especially if you're a business owner, right, Jerry?
Of course. I mean, just over the course of the last 3 years, Jeremy, personally, I've personally witnessed a handful of my, some of my larger clients, business owners, entrepreneurs that have just packed it up, sold the shop, and left the country. Industry is fleeing Canada, but we do have businesses here that are, going to fight it out, that have decided we are going to stay in Canada and do what we can. We have a goal here to grow this business, expand this business, and fight rather than flight. Now, this is just coming on the back of, CPI this week that came out, still rising, although the CPI number came out under what was anticipated, which adds fuel to the whole U.S. to cut in September. But now the narrative has shifted from not if they're going to cut interest rates, but to how much they're going to cut. Are they going to do an emergency 75 basis point cut, a 50-pointer? I think they can. I think when something happens, that black swan event, they're going to cut and they're going to slash, which only leads to higher costs. Inflation will not disappear. If you're not raising interest rates, inflation will continue to rise, and stagflation is horrible for business. So many of our companies here in Canada, we argue that companies should be holding some of their cash in gold. Why? As economic uncertainty grows, more and more companies are seeking to invest part of their surplus cash in tangible, liquid, hard assets that perform well in turbulent times, especially in times of stagflation. You want to get in touch with Guildhall. We offer corporate accounts on top of buying direct to take it home. Secure your wealth in a private facility outside of a risky digital banking system. But, investing just a portion of a company's treasury in physical gold and silver offers several advantages, in which you have a report coming out primarily centered around value preservation and financial risk management. And among the reasons, I just want to highlight 3 of those reasons why, if you are listening, if you're an entrepreneur, a business owner, why you might consider the strategy of holding and diversifying into physical gold or silver. The first one, currency depreciation resilience. If a company's local currency, the loonie, loses value against other currencies, holding gold can provide a buffer against this depreciation. The loonie has lost over 96% of its value since 1915. In fact, all fiat paper currencies are rapidly declining due to governments overprinting them. Holding gold defends against this. Number 2, liquidity. Gold is a highly liquid asset, meaning it can be readily converted into cash when necessary. Although selling gold may involve, certain costs, it still remains a viable option in financial emergencies. We did see this. We did witness during the Japanese meltdown, companies and institutions had to sell the physical, tangible, liquid gold to shore up cash to cover margin calls. And thirdly, trust and even branding images. I love this. Brand your company. For some companies, holding physical gold symbolizes financial strength and stability, boosting the confidence of investors, their customers, and even partners. Holding gold is the foundation. It is the power money. It is the peak of the inverted pyramid, of Extra's pyramid. And holding gold is just going to boost your branding image. I know numerous companies who are not involved in gold that hold gold in their reserves. They just boast about it, Jeremy. It's amazing to see that these companies can, start marketing this, posting these things on social media. It does boost the trust and branding image. So if this piques your interest, I want to urge you and encourage you to get in touch and inquire with Jeremy or myself about Guildhall's corporate accounts. We want you to get in touch with us.
And I think that from a timing perspective, we want to look at it as it's only going to get harder to get involved. If the banks are starting to talk about it, you can guarantee at some point down the line here, pension funds or much, much larger entities are going to be looking to get involved in the market. And once those big entities start entering the market, you will not have a chance. You'll be pushed out of this market from the supply side. The prices are going to get too high. It's going to be very difficult to start making those moves after the fact. As we say, you can't get insurance for after the fire. You need to get it beforehand. So it's worth considering now from a timing perspective, especially with inflation right now and what could be coming in the future. So give that some consideration. Obviously, as you mentioned, Jerry, we are here to discuss that. We love talking about the markets. Anyone in the office knows how much we just love talking to our clients about the markets and the reasons to be involved. Give us a call, the number 1-877-8-SILVER, the website, guildhallwealth.com. If you've missed a show, we post it on YouTube, we post it on Rumble. We do also put out information on X throughout the week. And we want to thank all of our listeners for joining us this week. Thank you, Jerry. And we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.